morning, and you're watching Buy Now Sell Now on ET Now with me, Vinny Motiwala, along with me, Shrishti Sharma as well. And Shrishti, very good morning to you as well. Markets, same like is holding on about the 21,300 levels, nearing 21,400 as of now as well. And look at the Nifty, yes, trading at the day's highest point, up 0.6% in trade. Other than that, let's look at what the broader markets are doing today and how they are performing in tandem with the benchmark indices. So when you're looking at the broader markets, Nifty mid cap outperforming the benchmark indices, up 1%. Nifty small cap too doing quite well and holding on to gains of almost more than 1.5% as well. So yes, good strength that is seen in the markets, and a rally as we call it, as Shrishti seems like that's here as of now. But will it stay? Is something to watch out for. But as of now, markets holding on to good gains as well. Let's look at the sectors that are holding on to very strong performance today that have been coming in as well. Is the Nifty Realty holding on to 2% gains, top sectoral gainer, followed by Nifty Metal as well. So yes, good gains on that front as well. And what's not doing well actually today, when you're looking at most of the all the sectors actually as of now are trading in the green. So surely a green day coming in, Shrishti, following what you are wearing. Seems like the market is also following your trend. So I hope you keep wearing green. Happiness for investors at least going forward over there as well. But some of these individual names that we have, let's look at a Nalco that's holding on to very strong gains as well. Shrishti, today we have a PEL, that's Piramal Enterprises, holding on to good gains as well. Deepak Nitrite and Gale are some of these other names which are doing quite well, holding on to very, very strong gains over there. While in terms of, some of these volume actions also, where are we seeing good volumes coming in as well? Obviously these smaller names, when you look at it in terms of the price value side, whether a Vodafone Idea, that's holding on, seeing very strong volumes as well. IRFC is also seeing good volumes. While in terms of IIFL Finance today, it's down and out in trade, down 4%. Let's keep an eye out on terms of that on the back of news flows as well, Shrishti. But yes, that's how the market setup is looking like. More individual moves that are coming in the stock price as well, and Realty Metals holding on to very, very strong gains as of now, Shrishti. That's how it's seen like as of now in the market.
Okay, so that's how the markets are. But Vinny, with the color of the dress, we're just trying to have that Christmassy feel around. So surely the markets are also in a cheerful mood indeed. But with this, let's move on. And viewers, don't forget that today is Friday, and today we're gonna be getting you Buy Now Sell Now Pathshala as well. It's gonna be a learning Friday for all of us, like always. And since Kunal is on leave, today we have a very special guest to make us learn more about the technical analysis. And with this, let's go across to Himain Kaparia, who is the Senior VP Institutional Equity at KR Choksey. Himain, very good morning and thank you so much for your time. It's great to have you for Buy Now Sell Now Pathshala first of all. And let's go straight to the topic for the day. And we guess that it's understanding on trend lines on the technical front, a very crucial aspect when it comes to the technical analysis. So Himain, take it away.
A very good morning to you, Srishti. A very good morning to you, Vidhi. Thank you for having me on the show. And yes, it's such a pleasure. I think I'm doing Pathshala for the first time. So, I would say one needs to look at basics. You look at volumes, you look at trend lines, you look at patterns, you look at support resistance levels. But the basic and one of the most simplest tools which can be applied is trend lines. And frankly speaking, it is sort of self-explanatory, Srishti. A trend, a line. So the line supports the trend. It can be a bearish trend line. It can be a bullish trend line. In the sense, you have an upward slanting trend line which supports the up move, and the price takes support on the trend line, bounces back, and continues at higher tops, higher bottoms. And if you look at the downward slanting trend line, which can be a resistance line, a supply line. So whenever the price comes and touches the supply line, it comes down. And finally, if and when there is a breakout, we see a turnaround, we see this line being overcome with volume. That would constitute a breakout. Now, if you can see the charts, there's one which is PI Industries. I've given slightly longer term charts here. There's a myth that technical works only for short term. No, it doesn't. It's like you play T20, you play one day international, and you play a 5-day test match. Technicals work on all time frames. So the first one is PI Industries. Shrishti, if you can just have a look. It's a monthly chart. This line has been working since the last few years, and now we've come to a crucial make or break level. Now, okay, there's a monthly line, so we need to wait for the months to end. And if it closes below this line at the end of the month, it would also mean it has given a downward bar reversal. If you check the mechanical indicators, they've given a crossover sell. And more importantly, it would have closed below the supporting line, which is the trend line, and give a downward breakout. So this is an event which possibly could happen at the end of this month. The second one is exactly the opposite, Shishti. If you look at Castrol, now this line has been working for what itself, you can see it's working for almost 8.5 years. We've had a downward slanting trend line which has been providing resistance since 2014-15. Now, in the current year, we've seen a breakout, we've seen a small throwback coming in, and now the stock is improving. So, a 8-year trend line being overcome is a major bullish signal, and it would also mean onset of a longer term uptrend lasting for a couple of years. So, it's a very basic tool, but frankly speaking, it's self-explanatory because once you draw it, and if it does not work the next time, you're wrong. So, it sort of self-checks and tells you how you need to fine-tune it and adjust it. So, take it up.
Right, that is for today's Pathshala. Thank you so much for explaining our viewers, these technical terms that come in. What is trend lines also? Thank you so much for that, as well as indicating it, especially showing it to us with two charts. One was of PI and one was of Castrol as well. Thank you so much for that. That was on Buy Now, Sell Now Pathshala. But on that note, we're going to slip into a very short break. Don't go anywhere, because after the break, we'll be discussing a lot more in terms of all cargo logistics, what's happening on that front, as well as we'll be joined by the management. Welcome back, and you're watching Buy Now, Sell Now on ET Now. Yes, Nifty is holding on to gains, but there are two stocks that we're keeping an eye out on: All Cargo Logistics, All Cargo Gati. Both these stocks have been in focus today as well. There's a corporate restructuring that has actually happened here. When you look at All Cargo, it's up in trade, but All Cargo Gati is actually down and out. Now, what does this mean for both the companies? What is this restructuring actually shaping up? So, Amit, if you could just start by explaining us, firstly, thank you so much for this, and, explaining us what this actually means for both the companies. While we are seeing All Cargo Logistics actually running up in trade, how is it impacting Gati? Because All Cargo Gati is down and out.
Well, this is what we understand after speaking to multiple participants in the market. So first you need to understand the structure of the business. Now, All Cargo Logistics is the main company. It owns the international supply chain business. It also has some support function business, and the contract logistic business also is present in the company. Along with this, it also owns around 52% stake in All Cargo Gati, which is the listed entity, and it also has around 30% stake in another express supply chain business, that is Gati Express and Supply Chain business. And on the other hand, if you see, All Cargo Gati has its own some business and around 70% stake in that Gati Express business, in which 30% is owned by All Cargo Logistics. Now, what kind of restructuring they are doing here is, firstly, All Cargo Logistics here is removing the international supply chain business into a different unit, which will be named as All Cargo ECU. Then they will be merging the All Cargo Logistics contract business and the 30% stake that they have in Gati Express with All Cargo Gati. And the last step of the merger will be, they'll be merging All Cargo Gati again with All Cargo Logistics. So it's kind of complex. Now Street is actually wondering why the company is doing such kind of a complex restructuring to simplify the process. They could have just simply removed the contract logistic business and the 30% stake that they have in the Gati Express business to All Cargo Gati, and the same resultant demerger could have happened for the company. Now, what they're doing here in terms of ratios, if you see, current shareholders of All Cargo Logistics. Now, for them, the shareholders share swap ratio is very simple. It's 1:1, which means that the current shareholders of All Cargo Logistics will get 1 share of the new business, and they will get to keep the 1 share that they have of All Cargo Logistics also. And All Cargo Logistics going forward will have, if you see, the businesses of contract logistics and the express logistics that they will get from All Cargo Gati going forward. So that is the business structure here. Now, in All Cargo Gati, they will be getting the contract logistic business. Now, that business is valued at close to 640 crore rupees, and the additional 30% stake that they will be getting from All Cargo Logistics. And now this is what Gati will be getting. That is valued at around 720 crore. So if you see, the current market capitalization comes off for Gati was around 1800 crore, and they will be getting businesses worth around 1360 odd crore rupees. So it's quite complex, and to explain this much better, let's get in Ravi Jhakar, who is the Chief Strategy Officer of All Cargo Logistics, to explain us why this business, why they have chosen this restructuring of the business. So firstly, sir, if you try to understand this restructuring business. Now we understand that it has been done for simplification purpose, but why did you choose such a complex way? Here, firstly, you're demerging the international supply chain business to a separate unit. Then you're removing the contract logistic business from All Cargo Logistics and giving it to Gati. And then you're merging the entire Gati operations with All Cargo Logistics. So why such a complex restructuring process here?
Yeah, so thanks. It's a pleasure talking to you. And let me clarify. These are like intermittent steps of one composite scheme. So you honestly need not worry about the intermediary steps. The outcome is very simple. And let me make an attempt to explain that to you. First of all, it is in line with our long-term strategic roadmap that we have undertaken over the last 3 to 4 years, when we want to go for very simple corporate structures and we want to provide independence to businesses so that they can drive growth. As you know, as part of the earlier scheme of rearrangement, we have already created 2 independent entities in Trans-India Real Estate and All Cargo Terminals, and we have also exited several non-core businesses and assets. So today, we were having 2 flagship businesses, the AQ Worldwide business and the Gati and Contract Logistics business, which was still in a very complicated structure. And the steps that you've identified are complex only because the current structure was complex. But let me come to what it means at the end of the day. The international supply chain business demerges in a very simple 1:1 mirror demerger. The shareholders of All Cargo, who are participants in this business, would continue to hold the stock in a simple 1:1 ratio. 1 share of All Cargo would give 1 share of All Cargo EQ. So that's very simple. The business that remains behind of Express and Contract Logistics, that will become extremely simple with both the businesses rolling into one listed entity. There'll be no subsidiaries, no shareholding through step-down structures. One simple, clean structure. All the companies fold into the remaining All Cargo Logistics post the demerger of international supply chain, which means that both Express and Contract Logistics business would sit directly under the listed entity. So from a structure point of view, this would be the outcome, and this would be a one-step outcome from a composite scheme. One need not look at the complexities because those complexities are warranted by the complexities that exist today. As an outcome, the shareholders of All Cargo would continue to hold the shares in both these businesses combined. They today also own these shares, but they own it through a complex structure. Now it would be direct shares held into the operating business. As far as the Gati shareholders are concerned, which is other than All Cargo, for them it is a twofold advantage. Number one, they would also today, instead of holding the shareholding through a step structure in Gati Express supply chain, they also hold the shares directly in the operating entity. And the second bigger advantage is, if you look at it, today the Gati listed entity participates only to the extent of 70% share of the express distribution business. Now with this composite scheme, the entity would participate in 100% of the express business as well as 100% of the contract logistics business. In terms of scale, it moves to more than 1,800 crores of revenue. The express logistics business, which reported about 71 crores EBITDA for FY23, and contract logistics reported about 121. So combined, you're talking about roughly close to about 200 crores EBITDA. And on top of that, with synergies on the customer side, synergies on the cost side in terms of infrastructure, zonal regional management structures, and a lot more, these businesses would stand for 1 + 1 becoming greater than 2. So it would become a business of significant scale. It would also be very uniquely positioned because there's no other business like this in the country which has capabilities on both distribution and warehousing. So it's a momentous day for all stakeholders, be it customers, management, or the shareholders of 2 listed companies.
Okay. Sir, sorry for asking you this again, but I'm asking this just because there is a lot of confusion in the street. What question here is that couldn't you have just chosen to remove the contract logistic business from All Cargo Logistics and transfer it to All Cargo Gati? I believe that structure would have been still the same. The ECU business would have been in All Cargo Logistics.
Because the business would have still been at the underlying subsidiary. Gati doesn't have any business today apart from fuel stations which are marked for sale. So the business, even in Express, is in the underlying entity of Gati Express supply chain. So what we have done is we have collapsed all layers, eliminated all holding structures once and for all through this composite scheme, and the eventual entity will house the business directly. That's the best structure from anybody's perspective. There's no advantage in having a step-down subsidiary structure. That's what we have set out to eliminate.
So, sir, you're transferring the contract logistic business of All Cargo Logistics, that is All Cargo Supply Chain Private Limited. So what is the valuation that you have assigned to this business while transferring it?
So the independent valuers have done the valuation for both the underlying businesses, the contract logistics as well as the express supply chain. And on the holding companies, they have looked at the asset base, etc. We would publish the scheme document in the coming days with the exchanges, and that will be made public by the exchanges.
And how have you arrived at the share swap ratio of 63 shares to all Cargo Gati shareholders for every 10 that they hold? The last stage of the last stage of merger, that is between All Cargo Gati and All Cargo Logistics. That share
So
swap
share
ratio.
swap ratio is again recommended by the independent valuers on the basis of valuation of the business. So for instance, when it comes to listed entity, they would typically evaluate on the SEBI guidelines like 90 days volume weighted average or 10 days volume weighted average and see whichever is higher. For entities which could be holding only businesses, there could be a pass-through look. So there are various mechanisms by which the valuers look at it, and they would elaborate in the report that has been presented to the board, and these findings are filed with the exchange and made public. So all the details would be available. But as a result, if you see with the 10:63 outcome, today All Cargo has about 25 crore shares, which after 3:1 bonus would be about 98.3 crore outstanding shares. On top of that, at 10:63 ratio, the non-all cargo shareholders of Gati would get additional 40.9 crore shares. So from that standpoint, about the eventual entity will look like holding about approximately 139 odd crore shares. And from the non-all cargo shareholders perspective, which is holding somewhere close to 49%, they would continue to hold almost close to 30% in a much larger business. What used to be a 70% of 70 crore EBITDA is effectively now 100% of the combined EBITDA of contract logistics and the express business. So that's the layout. So it is a very, very interesting restructuring, which makes it efficient for everyone. And that's the reason why we have gone for it.
So one more question here. Post all this demerger and merger has been completed, on the bottom line front, will it be EPS accretive?
Absolutely. So if you look at the contract logistics business has been cash profit generating business with consistent growth over the last 7-8 years. And now it would contribute to the capabilities for both P&L and add to the strength of balance sheet also for the combined entity and provide support to the express logistics business as well. And combined, they can potentially grow faster, and therefore it should be EPS accretive because profit should expand on the back of this. As far as the international supply chain business is concerned, of course, we look forward to the bounce back in the second half of the year. But beyond that, an independent structure would allow it to use its capital efficiently, and it would allow for also digitization in a better way. And with a sharper management focus, independent board focusing only on that business, we believe that business also should gain better momentum. And therefore, both businesses on a standalone basis should drive better growth going forward.
There have been a lot of corporate actions related to the All Cargo Group. There were merger also previously also, then this demerger during COVID time, there was a delisting corporate action also. So should shareholders expect this to be the last one?
Absolutely. We started, like I said, we set out on a journey which lasted about 3 to 4 years. The primary objective was to exit from all non-core subscale businesses, focus on core businesses, and keep them in an extremely simple structure and focus on their business transformation. That's all that we have done, and this was the final step pending. This concludes the whole restructuring. At the end of this, we would have 4 listed companies hosting 4 businesses, which will be run independently, and they are well poised for growth based on the underlying market conditions and also the strategic business initiatives that we've been taking. So this is the last step of the restructuring, which has been going on for the last 3 to 4 years in a way.
So along with this, the board has also approved a fundraise of 500 crore rupees. By when will this 500 crore rupees of fund be raised? Will it happen post the restructuring or pre the restructuring?
We would evaluate what's the right timing based on the business plan that is being put across for various investments and initiatives within the business of express and contract logistics business. In terms of timing, we are yet to decide on that, but I can confirm that the corporate actions are not a limitation on the same, and we would continue to evaluate what the right timing is based on the requirements of the company, and we would come back when there's an update on that.
Do you have any initial talks with the investors currently on this fundraise?
No, nothing has been initiated at this point in time. This is a preliminary approval, based on which we'll reach out to the shareholders. And once the shareholders approve, then we would in parallel start working on plans which are most appropriate in the best interest of business.
Now, moving away from this demerger, the Red Sea disruption that is currently happening, how does this impact your business? Will this impact your volumes going forward? Anything you could say on that front?
So what's happening in Red Sea is quite unfortunate. It means that there will be longer transit time, which is an inconvenience to shippers who have been transiting their goods through Suez Canal. We are hopeful that with possibly diplomatic interventions, the situation should get diffused in the coming weeks. But until it gets diffused, we will have to route the sailings via Cape of Good Hope, which means additional transit time, somewhat additional costs. And there would also be a bit of an increase in the war risk surcharges as the insurance costs go up. So there would be a bit of a cost escalation on that, which isn't. But from a volume standpoint, we don't see that impacting. In terms of the freight rates, that could lead to a marginal increase in the freight rates. But on an overall basis, not a very significant impact from our point of view.
So when it comes to the contract logistics and the express logistics business, how is the competitive intensity? Have you been able to gain any market share on that front?
So on the express logistics business, if you would see, we have gained almost 18 to 19% volume over the last year. If you look at the previous year as well, FY23 was almost 18-20% higher revenue than FY22. So we have been growing at a rate which clearly seems to be faster than the market, and therefore we are gaining market share there. That's been driven by a lot of initiatives. On the contract logistics business, when we started through an acquisition in 2016, we were only into chemical contract logistics. And today we are not only the largest chemical contract logistics company in the country, but we are very well placed in several other domains, whether it's e-commerce or auto, or even some of the new segments that we are getting into. So definitely in both these businesses, we have been expanding our market share, and we see continued immense possibilities in both these businesses. And particularly with a combined management team, which is already somewhat in place with Mr. Pirojsha Sarkarifil leading that business. But now with all of this coming in one entity, this will make things much simpler as well.
Thank you, Ravi sir, for providing all that detail and clearing out the air, given the fact that the merger would be EPS accretive even for the Gati shareholders. Thank you, sir, for giving all those details.
Always a pleasure. Thank you so much.
Okay, that was a very interesting chat, Somit, that we had with the management of All Cargo Logistics, and a lot of updates that we got on that front as well. So thank you so much, Somit, as well as Ravi, for joining in with us and giving us full details about the company's restructuring as well. But we're slipping into a very short break. Don't go anywhere, because after the break, we will be taking all your stock-related queries. Welcome back, and you're watching Buy Now Sell Now on ET Now, and it's time for Christmas. And obviously, Merry Christmas to all our viewers, and to make your Christmas even better, today we have our favorite experts with us. We have Hemant Kapadia as well as Avinash Gorakshekar joining in with us to give us, solve all your stock related queries as well. So thank you so much for joining in with us, Hemant as well as Avinash. And let's get started with all those stock related queries just around Christmas. Christmas is on Monday, long weekend. So let's solve all our queries as many as we can today. So we'll go very quickly, because the first query we have today is coming in from Sudha. And Hemant, this one is for you. This is in terms of two stocks that she has. HG Infra, she's making a loss of around 20%, while also IIFL, she's making a loss of 50%. So now, given both these stocks, what should one's strategy be? Should they continue to hold this, sell, or maybe look to average these stocks?
Okay, we need firstly HG Infra. We've entered into an intermediate downtrend. It's going to take time. So if the investor has a shorter term outlook, I think she needs to book a loss, because this is going to take some time to play out. It hasn't even stopped its downward momentum. So I guess things are not looking too pretty as of now. In terms of IIFL, I'm assuming it's IIFL Finance, right?
It seems like it's IIFL Finance. Yes.
Okay. We are in an intermediate and longer term uptrend. Currently, we walked into a short term correction hold, but time frame has to be for at least 3 months more.
Okay, moving on to the next one. And Avinash, the next query is from RS Muntada. He's been holding 100 shares of GNA Axles from a price of 430 rupees. Wants to know the future outlook of this one.
Yeah, good morning, Shrishti. My sense is, this is a long-term good opportunity. I think although the second quarter numbers were slightly below expectations, they are largely related to the commercial vehicle and the tractor segment, and they have a large, decent exposure in the US and European markets. So I think clearly, if the investor has a 12 to 15 month kind of time frame, I would be quite optimistic on the company, considering the fact that they have a large basket of very large OEMs, which they cater to not only in the domestic but international markets. So I think keeping a 12 to 15 month horizon, one can hold on. I believe the year FY25 would be significantly better as compared to last year. So it's better to hold on, I think, and obviously if anyone wants to buy, the current price looks pretty attractive from a medium term view.
Avinash, one more query that is for you, and this one is on Tata Tech, obviously recently listed company. So in terms of, how are you looking at it fundamentally? Should one enter right now? This is a query coming in from Ramakrishna.
Yeah, I think at around 1200 rupees, if somebody were to enter the stock, at least keep a time frame of at least 2 years, because the IPO price was 500 rupees, and already there's been a big bump up on the stock price. So I think buying the stock at this level would be profitable only if the investor has a 2 year plus kind of horizon. Definitely, longer term prospects look good, but in the near term, the stock will remain in a very narrow range. So I think keep a time frame of 2 years if you're interested in buying the stock at current levels.
Okay, Himain, the next query is from Nagesh. He's a regular viewer and always keep asking queries on FNO. He's holding IRCTC 870 put options for January expiry. Any advice on this one? Should he continue to hold this particular option?
IRCTC is in a short, medium, and long-term uptrend. So he needs to hold this option only for the next 4 trading sessions. If it has to decline, it has to decline in this expiry. Otherwise, the bigger picture is positive.
And, Avinash, we have a viewer, Leon, who wants to know in terms of ITC, can they add more at current levels? What's the view on ITC now?
No, I think ITC continues to be a steady performer, and I think now the next re-rating trigger would be the demerger of the hotel business. Plus, our expectation is that there could be a decent amount of margin improvement. Recently, the company made a con call with analysts where they were very hopeful on margin recovery. I think if the investor has got a 12 to 18 month horizon, then I think one could definitely look at accumulating the stock at the current.
Okay, Avinash, one more query coming in for you. This one is from Sunny. He's been holding 2,000 shares of Alok Industry, bought at a price of 22 rupees. He wants to know, can he hold this counter for the next 6 to 9 months? Any view on this one, that in the 2 to 3 quarters from now, anything substantial could change for the company?
No, I think, Shristi, this is a company now taken over by Reliance, and that's the main reason the stock has gone up. In terms of fundamental numbers, have got to get reflected strongly. My sense is, if the investor has a couple of years in mind, he can definitely hold on. But the next 8 to 9 months, I don't foresee any major kind of re-rating in the stock. So I think if he's got a short-term view, it's better to switch to some other counter, where possibly the risk reward could be better. Alok Industries could remain range bound.
Okay, on that note, we're going to slip into a very short break, viewers. Don't go anywhere, because we'll be back with all your stock-related queries.
Welcome back to Buy Now Sell Now, show where we get you answers for all your stock-related queries. And today onto the show we have Himain and Avinash with us. And Avinash, coming to you for the next query. This one is from Subramaniam from Chennai, and he's been holding shares of PTC Financial Services from a price of 47 rupees. What's the outlook on this one? Can he hold this for the long term, or rather can he accumulate at this point in time as well?
I think if the investor has a couple of years in mind, definitely PTC Financial should do well. I would believe that, the financing opportunity, not only for the power sector, but even other related sectors where PTC Finance is largely prevalent, I think definitely looks promising. The stock has been attracting a lot of buying at lower levels. So I think if he has at least a 12 to 18 month view, he can even accumulate at the current level. Our sense is that the risk reward could be significantly better over the next, say, 18 months.
Right. Himain, we have this query coming in from Rima from Pune. This one is on Paytm. They are holding 73 shares at an average price of 825. Should they look to average out more at the current level? Is it a good time?
Oh, it's just recovering. I'd say wait a wee bit. The technical structure has taken a hit. So if I go to buy, I'd spread it 600, 550. Currently, it doesn't look like a compelling buy.
Okay, the next query, Avinash, is from Divya, and she is writing to know that at this point in time, any of the shipping counters that you like, be it from GE Shipping, Cochin Shipyard, Reach Shipbuilders, any of the shipping stocks that you like, given the issues at the Red Sea, and other than that, between Ami Organics and Salsa Technologies and Maharashtra Seamless, any of these three counters she could go ahead and buy for the next 1 year.
Yeah, I think within the shipping sector, I think Great Eastern Shipping looks well positioned because the issue of Red Sea now most of the companies have to route out their cargo through the Red Sea is now going to actually benefit the shippers, but it will obviously be hurtful for the customers because not only it would involve a longer cruise time, but even more expensive. So I think GE Shipping is definitely well poised. So I think if the investor wants to put in money, I think GE Shipping could be a very ideal candidate. As far as the other three companies are concerned, I think my sense is, Maharashtra Seamless, according to me, looks to be a very strong bet, a very strong order book, and a very, healthy balance sheet. So I would believe that if the investor has at least a 12 to 15-month time horizon, we could expect a price target of around 1100 to 1150. So Maharashtra Seamless could be a good portfolio bet for the next 12 to.
Okay. Hemant, we have this next query from Subramaniam, which is on Polycab. Is it a good time to enter Polycab?
I think it's one of the better stocks. I think it's down today for various reasons. I think related to other reasons, but on a decline. We are in a long-term uptrend, and I would spread the purchase to 5300, 5150, and around 4950.
Any advice on Avantel Limited? Manila Raju wants to know, is this a good stock to enter for a long term, probably for the next 5 years? Avinash, this query is for you.
Yeah, Avantel is into a defense segment, and I think the numbers in the last couple of quarters have been quite encouraging. It appears to be well positioned because the order book also is quite strong and healthy. So I think if the investor has a 12 to 18-month view, it's always better to take a 12 to 18-month view rather than the next 5 years because things change dramatically. So I would believe that at these levels he can definitely look at accumulating the stock, but keep a time frame of at least 18 months.
We have Rebecca from Kolkata who wants to know, is it good time to invest for a short term in RateGain as well as Hitachi Energy? 6-month time period is what they're talking about.
Oh, Hitachi Energy is in an established uptrend, so that's the easier pick. It makes sense. And the other stock I believe was once again Paytm. Sorry, RateGain. Okay, RateGain is also in a very mature uptrend, so this is also a possible investment. Looks good. Once again, spread your purchases 700, 640.
Moving on to the next one, and Avinash, this query is from Pradeep, and he's been holding Garware Fibers, which he bought at a price of 3,122 rupees. He's a long-term investor. What to do in this one? Good to book out profits or continue to hold on?
I think you can continue to hold. See, this is a very niche company which operates in the marine sector. And I think the company's balance sheet as well as its long-term prospects are also very good. So I think since he's entered at a decent level, I think over the next, say, 12, 15 months, if he can hold on, he could expect a decent risk reward. I think probably, something like 36, 3,700. So keep holding. I mean, it's a good company with good long-term prospects.
Coming back to you, we have this query from Tina. I think she has a couple of fertilizer names like Chambal Fertilizers, RCF, FACT, and she also has KRBL. She wants to know, of these, is it attractive to buy any of these for a 1 year to 1.5 year time period? Avinash?
Yeah, I think my guess is, the fertilizer stocks normally get an uptrend just before the budget. And I think this time, as everybody is expecting, I think the government is going to focus more on the agri as well as on the housing opportunity. So I think, RCF, Chambal Fertilizers could be good defensive bets in case the government announces, strong kind of a policy where it encourages local producers. Then I think you could probably see a good upside in both stocks like Chambal and RCF. So I think you could take a calculated risk here and accumulate a small quantity. we could expect some good news for the fertilizer sector, and therefore Chambal and RCF would be the best position.
Okay, moving on then, and let's start taking all your stock-related queries in the rapid-fire session. And Himen, the first query is from Sahana. She's been holding Mahindra Holidays at a price of 325 rupees, sitting at good profits. Good to book out profits, or can she continue to hold on for the long term?
Long term, yes. Short term book.
Okay, Avinash, we have Sandeep from Lucknow who wants to know, can they enter Ugro Capital at the current market price? How is it looking?
Yeah, I think it looks attractive. I think my sense is that it's one of those smaller MSME financing players. One could look at buying with a target price of around 320 to 330 over the next 12-15 months.
Okay, Himen, the next query is from Narveer Jadhav. He's holding 1,000 shares of Indus Star at a price of 211 rupees. What to do in this one? Should he continue to hold on or move out of this?
Hold only if he's a patient investor. Book stock goes nowhere. Long term seems safe.
Avinash, for the long term, Vijay wants to know, Happiest Mind, they're holding 50 shares at 1,040 as well as Polyplex 100 shares at 1,650. What should they do with both the shares if they want to hold for a year or 2 year almost now?
I think Happiest Minds, can be held on for the next 12 to 15 months, but Polyplex, I think, still continues to underperform. I would suggest that they exit and probably enter some stock like Cummins, which has got a better risk reward.
Okay, Avinash, what's your take on Solara Pharma? Shasht Money has been holding 90 shares at a price of 1,147 rupees. At a huge loss on this one. What's the outlook? Any hopes on recovery?
Yeah, I think they're largely in the API space, and I think it would take at least maybe the next 2 or 3 quarters to recover. So my sense is, I think if the investor has a 18 to 24 month view, only then hold on. Otherwise, switch over to something else. I think probably, at these levels, maybe something like a Cummins or a L&T could definitely offer a better risk reward.
Okay, we have Alex from Pune who wants to know in terms of Himadri Specialty Chemicals. They have bought it at a price of 286. For a short term, Himen, how is this one looking for 1 to 2 months?
We've entered into a short term correction. It's moved up from 50 to 310. Isn't exactly a good time on the cusp of the market correction. So I would prefer to wait for exit for the time.
Okay, but with this, viewers, it's time's up in this edition of Buy Now, Sell Now, as well as in the rapid fire session. Thank you so much, Himen and Avinash, for joining us today and helping all our viewers resolve their stock-related queries. But with this, viewers, it's a goodbye from me and Vinny and the entire team who put the show together. But as we go, Merry Christmas to all our viewers. We'll see you after the long weekend.